Hi, everyone. As we head into Thanksgiving, the stock market's going to probably start to die down, and that was evident today in the overall market indexes. I'm going to get rid of some things here really quick just so we can take a closer look at what I'm really paying attention to. First, let's just get the volume out of the way. Volume was actually higher today on the Nasdaq, but we rallied 0.07%, so all is well. We still have this below average volume uptrending, which means we are still suspect to a big pullback. The good news is we continue to work off the short-term overbought conditions in the TSV and MACD on the Nasdaq. Before I go looking at all the oscillator of the stochastics, I'm going to show you the other indexes. The Russell 2000 slightly down today, 0.05%. I don't know what volume's done because MarketSmith has not updated it yet, but we're still working off those overbought conditions, MACD, TSV quite nicely. The S&P 500 today, also a good session, pulling back only 0.12%. Volume was above average and higher than the day before, but overall small losses still. It's interesting that we had higher volume, as I know everybody was assuming that we'd have lower volume going into Thanksgiving, but I tell you what, recently before holidays, that hasn't been the case, and once again, that happened today. Maybe we'll get our timeout tomorrow. I'm not counting on it, though. I expect probably volume to be heavy tomorrow again. And then finally on Friday it'll be lower because it's a half day. But Dow Jones Industrial Average, same thing, working off those overbought conditions. Switching over to the stochastics so we can see these. They're on the bottom. That's the one you need to pay attention to. It's rolling over from its overbought condition, working off those overbought levels quite nicely. The S&P 500 still is near those highs, but doing the same thing. NASDAQ is also working off those recent highs. Looking at the NASDAQ 100, same thing. But the best overall has been the Russell 2000, which is well off those highs, and the index continues to look good. So overall, the market looks great. There's really not much I want to complain about. The important things to take note of today is that we did have a full sell on our buy stop that got hit yesterday. Wage's buy stop looked beautiful. The only problem I had is initially when it broke out, it didn't keep on racing. It pulled back, but later on in the day, it got strong. Still, closing off the highs, it left me a little like, I'm not too sure about it. But still, with BOP increasing over the day before and volume above average, I thought that it was great. Probably going to follow through with the market overall. Today, wow, the opposite happened. I actually did not set sell stops intraday on this one. Normally I wait after one day when there's no earnings, and there was no earnings. But Wage did get below 58.70. Technically at 58.69, sell stop should have went off, but I didn't have one on the book. So the good news is that if we got filled at 58.69, that would be worse than where we're at right now at 58.76, but not that much worse. And it could have been really ugly today, so it was actually a bad move on my part to get rid of sell stops. However, with the volume coming in higher than the day before, reversing the breakout completely, closing at the base's low, and at 58.76, that's a lower close than anywhere in this base. It's a 100% sell. No questions asked. Got to get out. It's reversed the breakout. My final hard sell stop on the book would have been at 56.99. No need to wait till then. This breakout has failed. So Wage is a full sell. Also LNG. 50% of my position was sold intraday yesterday when it hit my sell stop by moving below, I believe it was 72.46. Nope, it wouldn't have been that. So it would have been 72.59. So when it moved, nope. When did that hit yesterday? I must have. Oh, I'm one day off. That's why. Okay, so the sell stop was below 72.46. I think by the end, it did not hit that by the end of the day, but by failing the 50-day moving average, it was just a 25% sell. So that's right. I didn't have any sell stops go off yesterday. Been working a lot, folks, with this stuff, getting up at 4:30 in the morning and then staying up all the way through everything. It's just been starting to, I guess, take its toll. But today it finally failed again today, hitting another sell stop, which was another 50% of the position. That now leaves me with just 25% of the position. So what we need to do on LNG is raise our sell stops higher. I've already been taken out of 50%, but if you have not, the close at 72.21 is below 72.46 low day, so that's a 50% sell. This is my final cut loss area, 71.50. The stock moves below 71.50 intraday tomorrow, it's out. If it closes below 71.50 tomorrow, it's out. So LNG is on the cusp. And then the biggest disappointment is EQM. I'm not sure what the hell's going on here. Very, very, very bullish setup here. This is a very, very bullish bar. Confirmation move with a pocket pivot point signal, strong volume, and BOP rising. The stock basing sideways, then giving another basically signal there when it breaks out. Still doesn't close near the high of the day, but overall everything looks great. But today's week close, closing near the low of day. That's it for me for this last signal. So 33% of the position is coming off. These positions will remain here and here, but now I'm raising my final sell stop levels to basically, it's going to be with a move below 87.20, and then the final sell stop that I had emergency on the books was 85.55. That's being raised to the opening price of 87.52. This thing needs to hold here or else I got to go. But EQM 33% sell. So LNG raising stops, EQM raising stops. Also TNET's a new long, did not put sell stops on the book, but one's going to be here. 31.16, 1 cent below the low of day. The other one 30.60, 1 cent below 30.61. Also on watch SWKS, JLL for the heavier volume sell-offs, and then of course I just showed you TNET. The new long positions, two high quality long positions. MFRM, we are already long. It is giving another back-to-back pocket pivot point signal. This time BOP is moved back to the green BOP level, and last time it did that, it had a nice little move higher. Maybe again, this is going to be a 2.5% add position. I don't have that much account capital, so I have to split what I have remaining between this one and MDVN, which is giving a pocket pivot point signal on huge volume, with BOP surging well over the recent green BOP highs back here like on the 17th, and overall ready to break out to new all-time highs. Cancelim stock, huge earnings and sales growth the past 3 quarters, but another excellent signal. So MDVN would be 2.5% and MFRM would be 2.5%. Why not 5%? Why not 10%? Market's too overbought. These positions aren't coming right off the 50-day moving average. It means that they are risky. And then the other new long signal tonight is one from an AAI scan of a bunch of portfolio managers. There's all these value scans and everything that I like to put together to make up an AA list. At least that's where I believe. Let me see the stocks I am long now. WJ. So that means it must have been from one of the AAI scans, but it's not the shadow stocks, because or else it would be flagged in that one also. But pocket pivot point signal as it bounces off support, ready for a attempted breakout to a new high. I am not taking this position until my EQM, LNG, and wage sells in the morning, just because I don't have the capital. I'd rather put everything into MFRM and MDVN, and then I can go and get a little bit of IQNT. We don't risk much if we're wrong. A move below 17.26, and we are out. And then if you want to, the emergency cut loss can be 16.86.